we are here on Real Estate in the Lowcountry, and our friend Benji Gecy has joined me. Good to see you.
Hey, great to see you again, Betsy.
Yeah. So we have a little bit to talk about today.
Hey,
you've said all year that they're going to go down, but now they're kind of up.
I'm still sticking to that plan. It's not the end of the year yet,
right.
But last 3 weeks, again, we're at elevated rates, as you can see from the Freddie Mac rate chart. I think this is a 3-year rate chart, but approaching the highest that we've seen in about 21 years here. So highest level was October 2022. Right now we're approaching those levels. So we've got a lot of ground to make up with my forecast. But as you can see, this data is about 5 days old, 6.9% on the average mortgage right now. So that rate is elevated. There are some programs that are into the 7s and upper 7s right now. So we got to see what happens from here. But I'm still sticking to my guns that we're going to have better rates by the end of the year. Fourth quarter is going to be very important for us.
Yeah, absolutely. We'll be watching right along with you. So we'll see what happens. But let's talk a little bit about some tips in trying to navigate where we are, because obviously people are still buying, they're still selling, and they need to know what to do in this kind of a market.
Yeah, and I think that's important right now. I mean, there's still homeowners that are buying, but there are some tips. And with my advice right now, if you can't afford to buy, you need to buy right now with the elevated rates, because we're starting to see sellers loosen a little bit on the purchase prices.
Right.
We're seeing buyers getting better deals, and buyers are getting more closing costs. So in that market, if you can buy right now and afford it, you're getting a little better deal, and you're getting some more closing costs. We talked about it in some other segments, quicker closings, 2-1 buy downs. There's lots of tools you can use right now. So if you can afford to buy, I think now is a pretty good time, because when the rates eventually roll over and go lower, there's thousands of buyers waiting to jump on properties.
They're just waiting for that to happen.
And that's eventually going to happen. Whether that happens at the end of the year in 2024, 2025, you're going to have a lot of competition. So I see things loosening up a little bit right now. Purchase prices are coming a little lower, and buyers are starting to get a lot more closing costs and a little better deal right now.
Yeah, well, and of course we saw that huge competition leading up to when these rates went higher, so it's just going to happen again. But let's talk a little bit too about, obviously if you're going to be buying at an elevated rate, you want to get the best elevated rate that you can get, and something that speaks to that is probably your credit score. So how do we want to relook at that right now?
Yeah, the credit score is actually very important right now, because your credit score, the programs price you out based on your credit score. So when you go to apply right now, there are 3 tips that I would recommend. Number 1 is the credit score. Okay. Have your credit score as high as possible, and there's all kinds of different programs to check your credit score. But know what your credit score is, and if you have to do a soft pull, you can call me and I can do a soft pull for you. That's not going to hurt you. But the higher your credit score is, the lower the rate's going to be. Right. And the mortgage broker can help you rescore that to get a little higher credit score, which yields a lower rate. That's going to allow you to have more buying power.
Sure.
So that's an advantage in the market right now. The other program is using an experienced mortgage broker, and definitely hire an experienced realtor in this market. So the new data that has come out recently is using a mortgage broker saves you about $9,400 on average. With us, I mean, we just had an example out of Palmetto Dunes. Their bank was at 7.5. We're at 6.99 on 700,000. That's going to save that consumer about 50 to 70,000 over the life of the loan.
Those are very big numbers.
Yeah, definitely. So we talk about it all the time. You got to shop your rate.
Right.
And if you shop your rate, you're going to save thousands of dollars. And if you shop it with a mortgage broker, on average, you're definitely going to save some money. So I think those are important tips in this market. People are still buying. The market's still active. And I think those tips are going to help you get under contract pretty easily.
So let's delve into the credit score just a little bit, because there are some things that you can do to kind of bolster that. So share with us some of those tips.
Well, revolving credit, you don't want to pay it off. You want to pay it down to the smallest balance you can. Open and active trade lines on revolving credit, that's what yields the highest credit scores. So we've rescored probably half a dozen people here in the last 30 to 40 days to help them get a little higher credit score. And rescoring those is paying down the credit cards, and that got them the scores that we needed. So don't pay those debts off. Definitely contact an experienced credit repair specialist, and they can go through the credit agencies to run the what if simulators that will tell you what will happen with your credit when you pay things off, pay things down. And we do that on a regular basis, and that can definitely help you out.
Well, and I think the takeaway here is make sure you are dealing with experts. So you're dealing with an expert mortgage broker, you're dealing with an expert realtor, you're dealing with an expert credit person, because that's going to save you lots of money in the long run.
Definitely, and insurance as well.
Yeah.
Insurance is very popular, it's very expensive right now. And attorneys also, you want to build yourself an expert team in this market, and it's going to help you save thousands of dollars for sure.
Excellent. Well, thank you, Benji, as always, for being here. And we're going to look forward to seeing you next time and see what those rates are doing
Hopefully
then.
better news next week.
Absolutely.